Stock up more than 40% so far this week. The company announcing a $7 billion data center lease deal with Applied Digital. The company's first earnings report was about 2 weeks ago. Shares are up more than 150% since then. CoreWeave also the #1 searched ticker across CNBC Digital yesterday. 30% of shares outstanding are short, according to S3 Partners. So, is this massive move higher warranted, or is this just the next meme stock? Joining me now is Gil Luria, head of technology research at D.A. Davidson, and Brent Thill, tech research analyst at Jefferies. Gil has an underperform rating on CoreWeave. Brent has a buy, albeit at a much lower price target. Gil, CoreWeave reminds me of nothing more than Supermicro 5 quarters ago. Is that fair?
Oh, it's a lot worse than that. This is somewhere between the meme stock like AMC and GameStop and Enron. It's really an off-balance sheet arrangement from NVIDIA. The value of the enterprise is owned almost entirely by the debt holders. This is one of the worst balance sheets a technology company's ever had. The deals are designed so CoreWeave has enough revenue to pay off the debt over 5 years. So all the equity holders really own is what's left over after 5 years of the data center in terms of value. And if we believe Jensen Huang, he thinks that the chips become obsolete after 2 or 3 years. So these data centers may be fully depreciated before equity shareholders even get any of the value.
Wow, that's a rough assessment. Brent, why is he wrong?
If you look at OpenAI, Microsoft, the rest of the industry, right, they're going to CoreWeave because they know how to build an AI data center better than anyone. So while I think many of the points are correct in terms of the debt and in some of the other pieces of the story, I think you have to look at the bigger story, which is we're at the beginning of AI. The biggest AI companies on the planet cannot do this on their own, and they've all turned to CoreWeave to build this infrastructure for them. And the fact that the most important AI company that we're all seeing is OpenAI, and they're effectively keep coming back to them for more deals tells you how good CoreWeave's management team and the underlying architecture of what they're building out is they're just on the right track.
Okay, Brent, I get that, but why is it worth $78 billion as opposed to, say, 35?
John, Palo Alto Networks' market cap is way higher than CoreWeave. They're like 10 other cybersecurity vendors. So if you look at this relative to others in the industry, I think this is a unique asset. Again, we're moving from the CPU cloud to the GPU cloud. And in 5 years, you look at the data that are in these clouds. It's not cloud data. It's not websites.
Okay.
This is advanced AI data. So I think ultimately you look at the proxies. I mean, No one thought Salesforce was worth this. No one thought Palantir was worth this.
I get it. Yeah, makes it. Okay, so Gil, back to you then. Why isn't this the Amazon, right, of AI data centers? If you build it, it will come. There was a time when people were saying, oh, well, Amazon's model is all wrong. eBay's better. They don't have to pay for this logistics infrastructure. It turned out being able to build e-commerce logistics infrastructure was a differentiator. Why is that not the CoreWeave AI infrastructure story?
Because the only reason Microsoft uses CoreWeave is they didn't get enough chips from NVIDIA. NVIDIA, instead of filling all the orders from Microsoft, Amazon, and Google, they decided to create this new category of neoclouds to keep the heat on the hyperscalers. So Microsoft didn't get enough chips. CoreWeave got those chips. So Microsoft turned to CoreWeave for capacity. But Microsoft is a direct competitor. The only reason they're using CoreWeave is because they have the capacity right now. When the contract expires, by then Microsoft will have built out the capacity it needs. It won't need CoreWeave anymore.
Gil, so what cracks the stock then?
The end of the lockup period from the IPO. The stock right now has a very, very small float, very high short interest. This is a spectacular short squeeze, just like the days of AMC and GameStop. And when we get to September and the lockup expires, everybody's free to sell shares. The cost of borrow will go down, and with it, the stock price.